Hey insiders, are you going crazy with Bill Gates' investment decisions? Being in such a considerable position, any further investment decision this man makes will affect others' investment decisions. Welcome to our channel, Financial Insights, the place where you are always a little bit smarter and wiser after seeing one of our valuable videos so you can develop your financial knowledge. Don't forget to press the like button and subscribe to our channel to make even more financial content. With no further delays, let us dive into today's video. Bill Gates has been doing crazy sellouts of his stocks from huge companies like Apple, Amazon, Alibaba, Google. There are various explanations as to what he is looking forward to, and today's video will help sort possible causes and his current stocks. To understand what stocks Bill Gates has been selling and buying, we will require an idea of his portfolio. Bill Gates invests a lot of his wealth into the Bill and Melinda Gates Foundation, which works as a charity foundation doing fabulous work around the world. This more or less gives us an idea that Bill and Melinda Gates Foundation preserves Bill's wealth through a huge stock portfolio. Currently, following the 13F filling, the Bill and Melinda Gates Foundation stock portfolio value is $22,336,725 as of Q4 2020, holding 21 stocks, wherein 11 of those stocks have more than 1% of the entire portfolio. Let's briefly look into these 11 stocks which hold more than 1% of his portfolio. From number 11, we have Coca-Cola, FEMSA, Schrodinger, United Parcel Service, FedEx, Crown Castle, covering 1.28, 2.47, 3.41, 3.52, 3.80% of the portfolio. Next, we can see Ecolab, Walmart, Canadian National Railway, Caterpillar, and Waste Management, which hold more than 3% of Bill Gates' portfolio, and first on the list is Berkshire Hathaway with 43.71%. Whereas big companies like Apple, Amazon, Alphabet, Alibaba hold less than 1%. But in the last quarter of 2020, Bill Gates has sold out 11 positions, adding only to Schrodinger. Now, let's see what all stocks he has sold and why he is selling them. The first stock that Bill Gates sold out 100% was Alibaba. The significant speculation of selling out this stock can be the droppings of Alibaba. Although Alibaba has completed 2020 as a record year, it is gaining more power over Chinese markets, which contradicts what the Chinese government wants. The Chinese government has actively shown its disinterest in private companies gaining more power, and the Chinese government would likely curb the growing monopoly of Alibaba. We may conclude that political tensions are more concerning to Bill Gates, that selling out completely is what he felt is safer than suffering loss. Next stock Bill Gates sold is his stock by 100%, around 1.1 million shares, in Boston Properties, the largest real estate investment trust investing in office buildings in the United States. The most probable explanation for Bill Gates selling off his Boston stock would be the less expected growth in physical properties dealings after the hit of COVID-19. Even though Boston Properties provides a dividend of 3.92, however, in the long run, companies are expected to move to virtual offices. To add to this, Mark Zuckerberg has speculated that by 2030, half of Facebook's employees will be permanently working from home. Bill Gates might as well have predicted the less growth in physical properties in the future, which lends him to sell out completely from Boston. Bill Gates completely sold out his Uber Technology shares, a 100% selling. Uber is currently seen with a market capitalization of over $107 billion, is selling its share for $57, but not really generating any profits, although Uber had a stronghold in 2020 with a surge of 71.5% and has gained 14.5%. Uber in its Q4 has reported a failure in reaching revenue targets. The company has narrowed its losses to 54% on each share on sales of $3.2 billion. Uber is carrying a high amount of debt similar to that of Boston's, which explains Bill Gates selling off his shares. The fourth major company Bill Gates sold in stocks was Alphabet, the parent company to Google. where Bill Gates sold 50% of his Class A and Class C shares. Alphabet is seen with the same PE ratio around 30 in the last 5 years. However, there has been a 176% rise in its stock value. Although their price-to-earning ratio has been around 30, sitting at 5-year comparison, it is high at 36, which gives us a picture with regard to Alphabet's historical performance. Its price is relatively high now. The last time it was high at 33 PE ratio was in 2016. Apart from the PS ratio, it is also touching the sky when you compare it with the last 5 years, and a similar condition persists with the PB ratio. With these stats in hand, selling these overpriced stocks will lead to the generation of significant revenue, although this is mainly for short-term investors, not likely for Bill Gates, considering he is the 4th richest man in the world. Another most likely reason for Bill Gates to sell off from Alphabet might be as well of the risks of an increase in interest rate. Interest rate impacts the stock market. This is the rate at which the depository institutions charge for borrowing money from the Federal Reserve banks. With rising interest rates, spending will be less. This is done when there is a high chance of inflation. Moreover, with the current overprices in the stock market, it is likely that we are about to see increased inflation. There is a high spike in bond yields, and whenever bond yields are seen increasing, it becomes an indication for inflation, which will trigger the federal bank to increase the interest rates. In Warren Buffett's words, interest rates act like gravity in stocks. The higher interest rates go, the lower the price to earnings will be across the market. With that, we can value a presumption that Bill Gates thinks there is a chance of increased inflation, increasing interest rates by the federal banks, which will eventually bring the PE ratio of Alphabet back to its average position. However, all above should not matter to Bill Gates, as Alphabet is leading its way in technology with a very strong hold on its fundamentals. The next big company where Bill Gates has sold 50% of his share is Amazon, which has gone up by more than 419%, with a PE ratio of 80. Yes, it is over 70, which makes it very high. However, when we are comparing its PE ratio with the last 5 years, it is seen that its price over earning ratio on average has always been over 70. The price to sell ratio is lower than what it was in 2018, which is still high compared to the last 5 years. It might look at face value that Amazon's position is high. However, when you look deep into its average, you will find that Amazon's position is going stable with regards to its last 5 or more years and is expected to be the same for coming years. Reason being, Amazon operates digitally, and with the hit of COVID-19, significant companies have moved to virtual performance, which gives Amazon a boost in these stocks. Although it is not entirely clear why Bill Gates will sell off his Amazon stocks, knowing its growth in the coming years, the only reason we can see is similar to that of Google. The high price will add to the increase of interest rates. The next huge company that Bill Gates sold is his 50% shares in Apple. With each share value at $133, Apple is currently at a 35 PE ratio, which is considered historically high, as for Apple, the price-to-earning ratio was below around 20. Keeping that in mind, Apple stock is most expensive and is at its 10 years high premium. Its price to sales, price to book are at their 10 years high position. The last significant high price was in 2008. The analyst also believes that Apple will be able to hold this growth position for a more extended period. However, Apple is the most expected to be affected in case of rising interest rates. Honestly, we would not recommend you to buy Apple shares at this high premium. Even though Bill Gates sold out so much of his shares from these huge companies, all of these sellings from Amazon, Google, Apple, altogether have caused a 2.12% change in his overall portfolio. The most surprising sell-off by Bill Gates was his 9% share of Berkshire. As you all may know, Gates and Warren Buffett, owner of Berkshire, are best of friends. In fact, Bill Gates is seen selling his Berkshire shares worth $5 million every single quarter except the third quarter, where Warren himself donates to Bill's and Melinda Gates Foundation. Maybe they have a secret deal, or Bill Gates doesn't want Berkshire to overpower his portfolio. In conclusion, Bill Gates' current portfolio's worth is more than what it is compared to the last few years, suggesting he has made some excellent investment decisions. So, what are your thoughts? Let us know in the comments below. Thank you for watching. Follow us on Instagram and make sure to subscribe and check out our other stock videos. See you soon at Financial Insights.